against my window. Sweet memory. I can't stand the rain against my window, bringing back sweet memories. I can't stand the rain.
Market is open.
Hey guys, this is Dontez Lindsay, General Manager of Ducks Trading LLC, Lead Trainer of Stockcraft, and I'll start this off with a disclaimer. But before that, good morning, thanks for coming, and yeah, back to the disclaimer. Yeah, I'll start this off with the disclaimer. I'm not a financial advisor. I'm not qualified to do a lot of stuff. So this is all for entertainment purposes only. Other than that, yeah, let's get right into it. So today, the market's already been confirmed dead by Steven. And I could technically try to trade this barely ideal VYGR gap up, but I'm not about that life. It only went up like barely 70% before the market opened. It's only at 63 right now. In the meantime, let me actually put on some filters. So how you guys doing today? Look at little Kevin got his peace sign up. Well, I got my little favorite shirt on, but we're just gonna hide that for now. Okay. What am I doing? Oh yeah. So let's go through a little bit of the platform. If you guys have questions, just leave them in the chat. I'll get to them when I see them. The stream's gonna be about an hour long, so you know, let's take it slow. I'm going to do this every day, so you should pretty much get used to my face. What is that? Don't worry, I'll get the food off your face, guys. Well, actually, that's just the, yeah, we're not gonna worry about that. Oh, they can't even see my screen. What am I doing? Put this over here. Yeah, so I got my TradeZero up, Stockcraft. Let me turn off the music, or at least turn it down. I don't want to like depress you guys with my soul music. Wait, it has to like 10 seconds. This is like a closure issue. I have to let it finish. Okay, now I'm done. Now, where is the chat? There we go. Salutations. Nice music. Thanks, Ricardo. See, Ricardo's been there from the beginning. LOL, I was enjoying the music to be. Hey, we could put some stream beats or some lo-fi behind there. Like, there's nothing to do today other than like answer questions and then go through like my notes. And you know, I'm pretty much a noob or a beginner trader, so my curve looks similar to a lot of other people, but we can just, you know, exchange knowledge. Yeah, see, like there's a lot of stuff that I'm just learning how to apply. It just took a while, but let me switch that music. What do you guys want to listen to? The default is going to be my study jazz. There we go. Oh yeah, I have no rights to any of the music. And most of the pictures I got are from the ones that you can use off of Google. Yeah. I need to learn how to put this chat somewhere else. But other than that, let me just fix this up a little bit. Oh wait, I could just load my old workspace. Easy. Well, that technically not better, but I do like my gainers up here. There we go. It just took a while to load. Have anybody tried using the StockCraft platform lately? Like, is there any lags and other stuff? Because it seems pretty decent to me right now. What's the one we were trading before? We're not trading, looking at. Stop it. I can't wait till there's an actual trade that I can trade live. But then I'll show you my power. Okay. I should probably stay close to the mic. Oh, there's a lot of questions this time. LOL, I was enjoying the music. Hello. What is ideal about VYGR? There's nothing ideal about VYGR. It's barely worth a trade. Just speaking about the range. And like there's only like 10 million resistance, if I remember right. Let's see. There's only like 10 million resistance around like 5 to 6. And that's that's too spread out. 2, the resistance is like too low. And then like even if you add in the individual resistance that goes up to like 4, well actually there are different levels, you can't even add it. Well, and what do you call it? The volume is already exceeded. I forgot to do this. That's not the right one. Alright, let's do this. Green symbol. Wait, what? It didn't change. Oh, wrong symbol. There we go. See, it was a user error. What am I doing? Yeah, I just back to the questions. So, let's see what we got. You're down 15K overall? Yeah, so that's what we call AMC and GME. That's what happened right there. Which one is Kempa right there? So, basically after I restarted like my account, I actually had like a little Robinhood for a while. I was making a little money on that until I got that like 90-day thing, because I'm just like, if I just go 4-day trades, they won't be too mean to me. Nah, they just straight locked it up, and I'm like, but I'm green. And so I just took everything out and just went to TradeZero. But like don't get a Robinhood account. That was just me trolling, and I do that. But what am I doing? Yeah, when I started out, like again, I had to control my arrogance, and so like I would try to do that forcefully with money, and you can see how that turned out. Like right here, I don't even know what loss this was, but the biggest one was when I actually thought I had the technique down enough to bet like twice as much leverage, because I see Steven do 4 times leverage every day. So like when you live with that, it's just like okay, all right, you calling me a bitch, huh? All right, I'm gonna wear my bitch shirt. I'm gonna get you. I'm gonna catch up. All right. But that's just me. What was I doing? Yeah. But like most of the losses came from GME and AMC. At least like 14K, and it was only like a 30K count to start with. And now I'm just climbing back up. I'm just gonna take my time too, and just perfect the technique. Like, you know. Let's see. What was the next thing? You're down 15K overall. Hi, did everyone make money yesterday? So I didn't get into CEI, and I didn't get into MRAPS. I just remember it looked like Marine. The reason I didn't get into MARPS is because I kind of read it wrong in the morning. Then I didn't get the borrows, And by the time that I recognized what kind of play it was already $1 per borrow. And I'm not about that life. At least not yet. Like until I get like either a big enough account or the ticker is high enough that the borrows don't eat me alive. Like either or, for real. But next. Yeah, that would be key. Key? Cool. KL. Let's just go with that. Why is a consistently downtrending chart not very ideal? So, consistently downtrending chart. Okay, so I'm a consistently downtrending chart. Okay, I think that was sarcasm. Wait, hold on. Let me read through this all because I'm pretty sure he's being funny. Let's see. Why is a consistently downtrending chart not very ideal? Question mark. Can be breakout. What's your name? I'm Dontez Lindsay. What's my last name? No, middle name. Lamar. So you can call me that if you want. You can just call me anything with a D or I don't know. Just point at me. I'll just be like, huh? But what does it say? How long have you been trading? So I started in 2014. Let's see if I can pull up old accounts. Do I even know the password for them, honestly? Ooh. Yeah, that's gonna be a monster. I think I'm gonna do that like another time. Cause like I'm pretty sure it's just gonna be me spamming the username and password for a while. But basically I took a 5K account, turned it to like almost double, but a lot of pink sheets, ETFs, and something else super, like there's no liquidity there. Let me just put stock graph in the background. Like I'm not even flipping through stuff. You know, I could just pull up notes. Like half of you can like take notes or something from my notes, then the other half can talk to me. Okay, that's what hell looks like. That you don't want to see that. A trading challenge. Okay, this is one of my little like get your stuff together. Let's do yeah, here's the criteria for gap up short. There we go. That should do something. Now I'll go through that later, but this is recorded, so you just check it out in the recording if you can't see it now. What's it doing? Okay, I know what I could do. I can put the YouTube over here. Now I can see it. Sweet. Look at that. Only took me 10 years. All right, now what's that doing? Could you share your notes? Question mark. Yeah, I'm transparent. Like if it helps you, like I did my job. I was just told, hey, could you teach something online? And I'm just like, I could teach something. I don't know if it's the right thing, but it's something. Yeah, but how long have I been trading? I started in 2014 with Steven when we were seniors in high school. And back then, did we use our mom's account? Like we did something that we weren't supposed to. But basically, I would make a lot of mistakes, and then Steven would be there to like cheer me up when like those mistakes happen. At the same time, he'll just indirectly learn, don't do that. And we eventually got into like the Tim Sykes program, and we learned a little bit of the basics, and we took the like small basics that we learned and just started creating this abstract ideal of what a trader wants by going through other services, reading a lot of half price books from the half price bookstore. Like started with Trading with Dummies, went to what do you call that? Investa. Like there's just a lot of books, and we try to take the concept or at least one thing from each book. But that's how that goes. Basically, when I got into college, I was trying to study electrical engineering in Berea College, and Steven was studying environmental engineering and chemical engineering. And so like, it was hard to do both, especially since my college was a work or labor contract college. So you had to do your job, you had to study, and if you extroverted like me, you needed some type of a social life. Now adding trading on top of that, it was kind of hard. And so I just left it to Steven. And my whole plan, even when we first started, was to do this until I was like 30. And then by the time I get 30, then I'll have, you know, some money from the 9 to 5. And that was gonna like do like something from there. Until I saw Steven like come back and he's just like, hey, Dontez, guess how much I made? And I'm like, it's only been like 3 months. And he's just like, oh, I made 200K one day. I went into a meeting and everybody went to buy. I went to short, took everybody's money. And I'm like, taking people's money is bad. He's just like, no, it was legal. I was like, oh, snap, okay. But we're not gonna go in that. What am I doing? Okay, I can't stop thinking about it. All right. So I restarted back in 2021 after college, after a bunch of like depressing kind of things happened. And then it wasn't until 2021 I kind of like quote unquote like woke up, and I'm just like, I just realized how much of an opportunity I was like wasting. And it's not like I was lazy the entire time. I was definitely putting in work. I just didn't put in the amount of work that was like required to like love this stuff. Like I had the wrong aim, trying to chase the money, got burned too many times. I don't like pain. And then it just went there. But like this just became a therapy session. I'm not gonna go down that road. When you guys trade a quick moving stock like a gap up short and trying to get an entry, do you use limit orders exclusively? Also, do you use hotkeys? So hotkeys, I tried using that for a little bit and it led to a few accidental executions. When it comes to the limit orders, now we try everything with a market order. And to like make that process a little bit easier to do that is you just think of like market makers and anyone else on the floor and like the stock exchange or something that can like see your order stacking. And same thing with the algorithms. Like if they're starting to like see all this stuff and they're countering it, I'm not trying to be one of those guys. I'm trying to be the guy that waits till the battle's over, and then I'll come in and I'm just like, hey, that guy's weak, one shot, or like insta kill, and then I take the experience points. Except in this case, it'd be like winning percentage, and then that translates to money. But if you start thinking about the money, that's the trap. That's where it's just gonna come back and get you later. Next. So basically you play short only like Steven. So naturally, I gravitate towards long, honestly. And I'm talking about like, you know, put full leverage down, fully emotional, like we're going big or go home. Going short, it's kind of practice for me to go long later, but it's mostly, I have a master next to me that knows shorts. If I don't take that take that opportunity, it makes me dumber than I actually am, or something like that. So what am I doing? So it's also like, it's a coin. Like once you know one side, every time you lose on one side, you know exactly what to do on the other side. So like, that's how I see it. I try to keep it as simple as possible and then record everything in like my own words. And like, as you can see, like this is all the trading patterns we have. I'm pretty sure he doesn't want me showing like all of them. And if I scan all through them, okay, I'll eventually show them. But now on the third day, yeah, it'll be like more specific. Then I'll go to like the specific answer, just in case you can't like understand me. 'Cause I don't know what I sound like right now. What am I doing? So could you share your notes? Question mark. Yeah, I'll just leave out the gap up shorts for now. If you don't mind sharing how you track and analyze stock patterns. Okay, so I'll pull up one of my sheets. Hey, Caesar just subscribed. Thanks to Caesar. Marquez. Oh, okay. I got distracted by his name. What am I doing? Yeah. Stats. So I have my new sheet. My old sheet had a lot of data points. It's just it was wrong. But this is okay. So with gap up short, overall, if you are in like Steven's, wait, I know most of you are in the chat, but you want to calculate the win rate overall on the year, and you kind of don't have to do that if you're in the Ducks Trading LLC, because we do that for you. You just go to the multi-statistic report and it tells you like the frequency of the pattern, like the ideals, the ones that are supposed to be tracked, and then it gives you that win rate for the year. Well, when you get that win rate for the year, that's just the first layer, the first filter. You're gonna have to do a second filter that that becomes more like, you know, the users involved. And so if you can win up to 70% of the times, you want to see what your average, it's just easier to show you. So like these are some of the gap ups I've tracked. At least the ones that like up to March that I think were like, okay. So basically I'll list the ticker name, the float, the market cap. Pretty sure this goes over. High, close, before pre-market, and like I take little notes saying if I'll take the lowest from the close to like the beginning of the pre-market. Whatever is the lowest between the two, I just take the lowest one and then compare that to the open and compare it to the morning spike. What that basically gives me is the range. And when you create these equations, why is there only numbers right here? Oh yeah, because I know what it is. The equation is gonna come up looking like this. So this is basically the way the concept works is you want to divide by whichever one is the one that you're trying to find. And so I3, where is it? So from the open to J3 to the morning spike. So since I have I3 in the like in the denominator, I'm going to subtract by that, and it's going to help me find the range to the morning spike. And so that basically just says, hey, this went up 18% from its previous close. And you see how they're the same number? This was actually probably something else. I just changed it to that because like that's how I'm gonna like create my standard, because there's always going to be some type of small deviation in your statistics. Like this one right here, this is not actually a real one. Like you see how it's a $10 stock, 14 high and stuff like that, but then there's a 1 here. I do that just to correct my data, and if it is wrong, I can go back later, not only because, you know, I have a screenshot saved, but because this is just an easy fix that you can just put in like 1 equal replace and then put in, you know, like a dash or something if you're trying to find like an average between the morning lows. But that's just tracking the top gainers that you have to track the first time that you get into stocks. Because like if you go all the way over here, when you don't know how to track yet, you're still going to have to track, and you're just tracking basic data. Like anyone has access to the ticker name, cap, float, close, where's the other one? Open. And then you can create the percentages and stuff later once you get the formula down. And then you want to like, this is just the raw list. Like there's no like breaking it down at this point, but you will break it down later. And the way I chose all these top gainer gaps, I think the minimum was like 70%. And so that's what these are. When I went to my other gap, these are the ones that I actually traded. And so at one point, or at some point, you're gonna have to trade, you're gonna have to track all the gappers just to get an overall, what is the maximum pushing percentage what is the upper limit that this can go, and then you don't know that much until you start dividing them into their own market cap / float. And the way you want to do that is you're going to have 5 different categories of market cap. And that's going to be like 0 to 100, 100 to 500, 500 to a billion. And wait, that's just the short ones. Let's go to the taller ones. So yeah, 0 to 100, 100 to 500, 500 to a billion, and then 1 billion plus. So it's 4 market caps. And then you categorize those in chronological order using the float. So as you can see in my statistics, it all starts from like 1 to 3, 1 to 3, then it goes 3 to 5, 1 to 5, and then it goes up to 5 to 10, 5 to 10, 10 to 20. Then it keeps going like that across all the market cap categories and etc. All the way up to the purples, where if you play video games, like purple and gold are usually like the best. And the reason I try to code them like that is so I could find some type of like system in this. But yeah, we'll get into it eventually. I don't even know if I'm supposed to. Yeah, no, transparent. That's what we're supposed to do. What am I doing? Oh, let me get back to the question. Oh, snap. You guys are actually talking. Let's see. So basically, you play short only with Steven. Yeah, we said that. If you don't mind sharing, how do you track, analyze stocks and patterns? Right now, what's your best strategy for a new beginner? Gap up short and bounce short. It's really hard to mess that up. I can do it, but I have special powers. Okay, I'm not gonna finish that. So in these, you want to. Why are they black? Oh, I remember. That is my risk calculator. Where? What was that doing? I was doing something. Oh yeah, bounce short and yeah. So I'm gonna take you to the risk calculator. So this is something I created after learning from Jimmy. Like basically he sat down one day and he explained the concept of you need at least 50%. Okay. But what am I doing? I forgot what I was doing. I hate ADD. All right. So basically, when it comes to gap ups and bounce shorts, gap ups are kind of like a waterfall or like a water gun, and you shoot it in the air, and you're just trying to catch the top, but no one really knows where the top is. But what you have is reality. You have statistics. Like most of trading is just statistics mixed with like a little intuition based off of, your personal experience and your knowledge of being in a bad place that other people are in now that you remember like vividly. And then if you can just get past those painful moments where you're just like, if I took this trade like a little bit lower or a little bit later, like 3 hours later or something, you eventually know when to go in. But back to the original question, so I don't go too off topic. Yeah, a best strategy for new beginners: gap up short and bounce short. You trade the bounce short based off as a resistance. So you don't trade it like a gap up short. With the gap up short, you want to build the position. Like back to my notes, like you build the position and then you keep a really tight risk. If I pull up one of my handwritten notes, which is like you have to have all kinds of notes. Open up, dang it. See, there's 4 different types of gap up short. And when you, how should I put this? When you decide or when you determine what type of gap up short it is, you want to plan realistically, because it's really hard to follow someone else and get in the game and then just lose it. Your plan you had before just doesn't matter. You're distracted by something. And it might be fear, because fear is a blinding thing. Wow, it's already been half an hour? But what was I saying? Yeah, so this is a gap up short. So if you're doing this type 3, if you go in like right away, you might have made this this little dip right here, which according to my statistics is probably like 15%, I think. Yeah, morning low. That's how I calculate that, because it's from the morning spike to the morning low. And you only track the stuff that's fitting your strategy, by the way. But this isn't me trying to like teach you everything right now. You're technically supposed to go get the course, but I'll give you like a taste of like what I do, because a lot of people are actually gonna do like half of Steven's stuff, half of someone else. But the bounce, yeah, this bounce is how I calculated like how far it's going to bounce after the low. But I said after the low, after the morning spike, but before the morning spike, that's where the pre-market fade comes in. Wait, is it the fade? I'm confusing myself now. So yeah, pre-market gap, because that's just between those two, up to the morning, and then it bounces. Yeah, I'm good. Like, so basically when I did all my homework before, I brought up a thing called simple stats. This is where I try to use my, most American parts of me or something, I want to say. And I started to, wait, let's first see if you guys can see me. Yeah, you guys can see me. Each one of the gap up types, I would try to separate them and say, based off my statistics, these are the windows I'm aiming for. And like, these are the signals that, signal that like momentum's being lost, weak bounce, and etc. like that. Like, these are the kind of ideas you want to shoot for when you aim for that type of stuff. And then everything else on this side was just trying to put it in the simplest words I could, like momentum loss, don't trade floats, certain volume, keeping risk tight, like specific numbers. Because at the end of the day, this is no one knows what's going to happen. So if 30 people are watching, you want 30 thumbs up. Okay, he's treating me like a child. But it's fine. I am a child. I'm a child. Okay, but what am I doing? Oh yeah. So the reason I say gap up short and bound short as the beginner pattern, or the best beginner patterns, is because if you trade it with a small amount and you build that position on your under like PDT, you'll get used to having to limit yourself when it comes to like going in on the spike. And you're gonna learn real quick how it feels to be underwater in a trade, and that's going to help you a lot later if you get humbled real soon. The gap ups, like without resistance, those are the ones that you're eventually gonna have to like go for them anyway. And so I'd rather do it sooner than later. And when it comes to bounce shorts, like that's when you're gonna feel like you're taking a break, and it's just gonna be like easier money because it has a higher winning percentage when it drops. And where's my bounce shorts? Oh, I have a short one this time. Oh, I have the other. Okay, yeah. But I don't have any pictures though. Sorry guys, I don't have any pictures. Why do I have two gap up shorts? Oh, this is the old one. Okay. What am I doing? What am I doing? Bounce short. Not that one. Well, I can show a little bit of this. So with bounce shorts, there's a resistance, and when that resistance breaks, there's going to be a short squeeze. When you calculate how many people are going short in Stockcraft, like if you look at the short interest, short ratio, and like those type of stuff, if you know about how that represents the sentiment of the stock, you can use that as a factor to find the trend of the stock, whether you're long or short. It's really situational, but there's all kinds of factors that could do the same. But the idea is when you find whatever your trend is, you can take advantage of like the momentum shifts. And that's the case in bounce short, because like when that resistance breaks, it might test like 1, 2, 3 times, and you just don't know if it's going to break, but you do know when it does, there's going to be a specific amount that is going to break, and you're risking that break every time you go into a bounce short. So oh yeah, I forgot we're on Evernote, so I can just pull up any sketching thing. Where is my, let's just go to work. Daily meditation, stock craft notes, FC and students. No. Every rule I ever made. No. I forget it. We're just going to pull up a sketch pad. But before, let me bring back up the. Oh, you're talking more. Oh, nice. All right. Let me just do the sketch, and then I'll look at the next one. What do you call it? Sketch. There we go. So bounce short. If there's resistance, let's say just like 100 million. And then it goes up, and what do you call it? This is like at least 50%. Yeah. Oh my God, that's horrible. How does Steven do this every day? But what is it? It goes up like 50%. Like this is all you know, is that there's a resistance and then that there's a range gain. So you want to get at least like half of this range is like your goal. You don't even want to go in unless you get your minimum reward. That's like worth it, past taxes, past your borrows, past the commission fees, past all the other fees that you probably don't know as a beginner. But what I'm trying to say is the people that are going short on this stock, they're usually around like 10-20% of like the people in there, because 90% of the people are going long. And so when they're all fighting in this stock at the resistance, the longer this goes, as soon as this breaks out, you're looking for like that 20% squeeze. And the thing is, the buyers, like anything in the market, especially news, it's going to travel slow. And so just assuming everyone's a little slow, that 20% might like top out a little bit more. And so you need to know how to not just wait for that 20%. You need to know how to wait for like 7 to 15 or whatever is pretty much comfortable with your long-term goals. Like if you have a salary of like, 200K per year, and you like break that down to like a certain ratio of, I have to like win like 21 to 3 risk reward ratios, like reward to risk. Oh my gosh, this is, I feel toxic. Okay, what was it? Basically every one win you'll get like 2 more chances to like cover your butt. And so you want to like go for those super ideal plays. And then when it comes to bounce short, it has an 80% winning percentage. And when it comes to gap up short, it's like, 75%. And you can't really determine, wait, I didn't put the percentage there. You can't really determine when that 20% is going to happen. So you want to minimize those losses as much as possible. It's like, let's see, if we did, what did we say? Like 10 trades? Yeah. So like those 2 trades, like max, that's 30% down right there versus, like since we're doing 1 to 3 risk reward ratios, let's do the lowest on the reward part. So 7 times 3, that'd be 21. And I forgot what I was about to do with that. Yeah, 7 times 21, and then 21 times like this is the percent that you gained that day, by the way. This is like winning percentage. Like you lost negative 30, you won 21. And then you multiply that by the remaining amount of trades that you did, because we did 10 in this example. I should probably put that up there. I'm all over the place, 10 trades. I should probably just get back to questions on it, honestly. But you know, I'm not gonna just like flex on you guys with my math. So I'm gonna pull up a calculator because I'm humble. At least that's my story. 168. So basically you get up like 168% on your like profile after like 10 trades if you know how to like, you know, be perfect like a robot. And that's not gonna happen. And so out of this 168 like percent that you could potentially get if you were a robot, you're probably only gonna hit this with like, in my case, based off of my Kinfo at least, where's that? Let's see, 1 year. Right, performance. That's like 44%. Now if we're talking about the month, 71. Week, that. So I'm not that bad, but I'm pretty bad. But what am I doing? Back to this. So if I hit this with like 40% accuracy, that puts me at, you know, 67%. And so that means I was down 30%. And so, yeah, down 30% from the unavoidable losses. And so I'm only up 37%. And out of that 37%, half of that goes to taxes. Depending on when you borrowed and stuff, you know, the rest of it goes to borrow. And you're down with like 25, you're up to like 25% on your entire account. And so that's where like risk management comes in, if that makes sense. It probably doesn't, but you know, we'll go over it in like other ways that are more self-explanatory later. Let me just cancel this. I can't look at it again. I know, I need some type of proof that I did something. Let me just put that down. Okay, so next. Oh, that's a lot of stuff. So if you don't mind sharing, how do you track, analyze? Oh no, that's the old one. If you slowed, wait, what? I said, if you don't mind sharing, how do you track and analyze stock patterns? I did that. Right now, what's your best strategy for a new beginner? If you could slow down the volume in the background, then it's more clear to hear you. The volume? Oh, okay. Ooh. Let's see. There we go. Testing. Okay, it's not going in the red. I think I'm good. There we go. Now, sorry about that. I get a little excited if you couldn't tell. I don't know how I keep losing my place in these. Okay, can you share funny stories of ducks? I can. I don't know if I'll survive the night if I do, but you know, I can. Let's see. There was one time I had to break into his girlfriend's locker because we went to a private Catholic school. And so I would be the middleman pretty much. And so that gave me a lot of power is all I gotta say. And so there's like little things that I'll try to do just to be like, romantic, I want to say. And you know, when you're doing something for your buddy and then you know it's something good, it gives you a little bit more motivation to be a little extra. And I'm not gonna say anything about like black people being a little more extra than normal, but like I'm an extra person. But that's pretty much it. You know, doing chemical things in the snow like a heart and roses, breaking in the lockers, doing all kinds of over the top, trying to like get last minute gifts and things when like he forgets, and I'm just like, no you didn't, here you go. And he's just like, thanks bro. But here's what I say. How far do you think you are from Steven? Really far. So my retention of all the stuff that Steven teaches, if I had to give like a honest opinion, on it, it would be close to like 75 to 80%. Because there's a lot of stuff I know. It's just I don't know how to use it yet. And then even if I do know like a lot, it doesn't mean I can use it. Because the thing that makes him like really good at this is because he has like a very specific like he has more mental endurance than me, pretty much. And he also has a better focus, concentration, like all these other things that give him an advantage to like be more disciplined and productive. And the thing is, everyone has the same opportunity. So I'm not trying to say, oh, he's just like a 1 in a billion, but he is a 1 in a billion person to me. He's just very hardworking, and I used to be like that too, and that's why we kind of gravitated towards each other. It's just after I went to college, I just got broken so many different ways. And even before that, I was kind of goofy, still goofy. But did I answer the question? How far do you think you are from Steven, considering that you have access to Steven's data? So just because I look at his data doesn't mean I like understand it. If anything, it took me like I've known him for 10 years. And I've been looking at his data for like 3 to 5 as I've been working as the general manager. Just borderline policing the chat room and answering questions on the side, and other like, stuff that people don't want to do, but it needs to get done type stuff. But during that time, I've gone through the DVDs, the webinars, the everything several times. And it wasn't until I changed my aim, and that's when it started making sense. Before, I'm just like, oh, I just want to make money. This is easy. I started this a while ago, like all arrogance. And then when I get into the stock, all fear. So I can never really learn from my own mistakes. And then I would legit do everything that you're supposed to do right. Like I'd study, I'd review, I record, but I wouldn't review. There we go. Like I review it once, but then I forget it like a week or something down the road. And that came down to like my techniques of just not learning stuff right. I was the type of guy to get the high B's because I studied like all night, but that's a different thing. Let's go to the next question. What would you recommend for a startup trading capital that we can short and long? So 3 to 5K is the one I prefer, because you want it to be just enough to capture your attention. Because if you paper trade, that comes with its own set of like problems. But if you just want to like learn whatever broker or platform you're using, paper trading is like the best to do like right away. Especially when you just want to get used to going in and out of a stock, even if it is with like paper money, and like practice, like not following other people, but just practice trading. But there's going to be a point where once you have a strategy, you have an edge, you need to track your statistics, you need to have money in there, or you're just not going to treat it seriously. And you think you're probably taking it seriously, but you won't, because like soon as you put in money, you're going to see it's a different level of pressure. And then it's going to be so subtle that it's not going to appear like as a problem until a long span of time, and like that little doubts and everything just build up. Or at least that's from my personal experience. What do you call it? Hey D, Freedom C challenge here. So what Freedom Challenge student here? Okay, I just read that wrong. So what type of play do you focus on, if you don't mind? And did you play CEI? Yeah, so I played CEI. I took a small loss on the way up. I didn't play yesterday. Like I did get a fair warning from like Steven, but I think I was in a stream at that point. And if you couldn't tell now, I'm just like all over the place. And so I'm under the PDT rule with this trade. or like with this account. And so I try to limit myself as much as possible. And that's why I'm under PDT. It's not like I can't afford to be above it. It's just, this is the best thing for my temperament at the moment. And so I'm trying to learn how to be patient and all these other very useful personality traits you should have for trading, or for good trading. I'm more of a scalper, if that makes sense. But what am I doing? CEI. So I went in at 425, and at that point it was a little, if I remember right, I think it was a little crowded in the volume, and I just wasn't feeling that comfortable. So when I pulled the trigger, I only put in a third of what I borrowed, which at that point was only 700. And when I saw it go down to like $4, even though I know the correct strategy is to put everything all in one, right where you basically want to start your risk management. And so that's where the 425 started for me. But when it went down, I was expecting like some type of bounce, and then I'd add on to the bounce. Well, time feels a lot slower when I'm in a stock. And so like this 500 and this 500 here, that wasn't a bounce. That was me chasing. This is the wrong one. Oh, that's over here. There we go. Yeah. That wasn't a bounce. That was me chasing. I was actually supposed to add over here, which I did, but I had to get more borrows. And so as you can see, it went from 700, 500 to thousands. That's me getting tilted, or that's me, that's me upset that I didn't perform the right technique that will give me habits that will pay me back later with the side effects of having those good habits, if that makes sense. So like the good habit would have been put all your money in all one position right there at where you think it was going to top, which was like 425. And when I didn't do that, I just started scaling as it would perk up in small amounts, like never adding into weakness, but into strength. And then when I sold, I think it was like a RSI indicator on like Stockcraft. Like I was just playing with it, and I just saw it went to the oversold area, and I was like, oh, let me take that out, because the day was about to end too. And so I was not trying to hold it overnight. Back to the questions. But that was CEI. I did not see the news that was pending that made it go down to like $1. If I did and like saw stuff like that, I still probably couldn't do anything because the borrows were too expensive. Like that was when I checked. But that's a different story. It's like 8 minutes. Let's see. Do you focus on, if you don't mind? Yeah, I usually just try to focus on the high odds strategies. Like that was like my second multi-day runner. I was pretty much trying with like complete recognition of that it's a multi-day runner. And so I wasn't very confident with that, because multi-day runner is actually one of the hardest patterns that you're going to have to learn how to do. And you should expect to take like 4 small losses or something ridiculous if you don't know what to do on it. But what's it saying? Considering that you have access to Stevenson. No, not that one. I got in on MARPS. Hey, good for you. Like I saw that. Like I felt a lot of FOMO when I saw it go down like $3-4. Just in case. No, we won't have that much time. That's my problem. I have a lot of data I've been tracking, but I have a lot of useless info. Yeah. I had to pretty much restart that like 2 times. I went through every single one of the Ducks conferences just to make sure I was doing it right, because there's sometimes I'll do this thing where I'm like half listening, and what they used to call it when I was younger, selective listening, and I'll narrow in on like one specific word or phrase that you said. Everything else becomes blind, and I have to stop tunneling like that. I do that in League of Legends too. You know, I see that person get away with 1 health. I'm just, it's me or him. I'm like, but that's a different story. You can't do that in stocks. That's how you lose money. I got in on it. Wasn't very ideal, but I traded the breakdown. Hey, it's okay. You made money. But just remember, you get habits from chasing things that aren't ideal, and like those habits might bite you later. So just be aware, write down what happened, take pictures, and everything's gonna be okay. Just take it a step at a time, a day at a time. Long-term goal should always be in mind. And if you're in the stock market trading, you're here to make money. Anything else, it's not the right mindset to be in. Like you're here to make money, but you want to do it in a way that focuses on crafting a technique instead of just trying to bully people with money, because that's just gonna get you chopped. I know that, like, yeah. See, that's what the AMC thing was. Anybody else ever get into this kind of mindset that you're on a team or it's a war, and it's the buying pressure versus the selling pressure, and then like when you're on Steven's team, he's pretty much the captain. And so when you see the captain go up to the front line and he's just like, I'm about to put my big size down, who's following me? And then like me, I'm pretty much like one of the first mates, and so I'm just like, let's go with my small ass account, and I'm just like, he has a better position than me, so he's not crapping his pants. Me, I'll have not the worst position, but I have a small account, and so like I'll just get into this really pessimistic mindset of that. Even though the captain's there, I need to help out as much as possible, and then like that's another reason why I just feel like I'm just throwing money at things like this. But don't do that. That's a bad habit. Just do it all at once and build the right risk management. But other than that, let's just go to the next question. That's my problem. I have a lot of data I've been tracking, but I have a lot of useless info, and the few good ones I don't really know what to do with. Thank you for sharing. Can you do a video of how to track, not the numbers, but how to organize your sheets? I could probably do something like that, but I'm gonna have to get approved from the people that, taught me first, because I feel like they won't like that. 27 people are watching. We need at least half. It helps get the word out to YouTube. Guys, please give the show a thumbs up. Yeah. Yeah, guys, like and subscribe. It really helps the channel, and if you want to see more of me, just show some support. I really love that everyone's being very I don't know what it's called to like talk to each other. Communication. There's a lot of good communication here. I feel like I'm talking at you, and it's kind of weird talking to this Wally looking camera. Wally. But I like you guys, and I hope I can teach you something. Like I'm gonna just keep talking, and hopefully you find something out of what I'm saying. But the stream is gonna end in like 3 minutes, because this is gonna be a daily thing. So just come over when you're bored. Come hang out. Oh, someone took back their message. We all are man-childs. We are. We really are. Is the short interest of the current day? Yeah, so the short interest is what do you call it? So the amount of shares short divided by, I'll just pull up the note just in case I misspeak. Where are you? Short notes. StockCraft notes. Yeah, here we go. So, these are just random questions people ask. So, short is the short interest of the company. It shows you how pessimistic the short sellers are and how that can trigger a bear/bull factor market. Or like it could be used as a bull or bearish factor. And this short percentage is directly short interest, not short interest ratio, which basically takes the number of shares short divided by the daily volume. And the way you use that is that gives you the amount of days it takes for shorts to cover. And that's like on blue chips and like bigger stocks. Like it's a very fundamental kind of indicator. So in penny stocks, you don't use it as much. That's why we just put the short interest on. But it is still a factor that can play into shifts into the market. And that's why we put it up there. Same thing with PE ratio and EPS. I feel like there's supposed to be another one. Yeah, same thing with PE ratio and EPS. It's just they're not what I use as an indicator. So that's why it's a little harder for me to explain it. But it can be used as an edge. But for now, guys, we ran out of we ran out of time. It's 10:30. I'd like to thank you all for coming, and I'll just switch to the Sappy screen. Where's the Sappy screen? Sponsors. There we go. There we go. My name is Dontez Lindsay, General Manager of Duck Trading LLC and the lead trainer of StockCraft. Thanks for watching, and I feel like I shouldn't say thanks for watching, but thanks for watching, and I'll see you tomorrow. Have a good day, guys. Now, how do I start the stream? I think I go up here. There we go.